What's up everybody, Tom here with another video. In today's video, we'll be talking about why this chart is one of the most important to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the S&P 500, Nasdaq, gold, silver, Bitcoin, dollar index, and more. It's been all about hyper stonks yesterday in the earnings, and while the day was red, the aftermarket was certainly green. We're talking about that and more, and what's next for non-farms. Stay tuned. Alright guys, well it's great to be back making these daily videos after one day hiatus. Sorry about that yesterday, got a little bit busy. But as always, we kept those live streams going. As we like to do on this channel, let's take a look now at the heat map of what happened in the markets yesterday in terms of the large companies. It was mostly a sea of green. We mostly saw green across the board, but unfortunately some healthcare companies were down due to, of course, that patent discussion ongoing in the US about what to do with these drugs. We also had some massive earnings come out yesterday. We had Square, Roku, Peloton, AMC, Cloudflare, etc., etc., etc. The list goes on. And it turns out that most of them did okay. Now, what they really did was put on yesterday's close result losses. So effectively things like Roku were down 6.5%. Now they're up about 6.57% in the aftermarket. So they really just put on what they lost through what was a lot of panic selling into the hyperstock earnings. Is anything to be taken out of that? Well, I think it's more about the price action that we need to pay attention to. Look at the buying near the close. As we always say, the close is the key. And you'll see here the Russell went from a big negative to a positive. The Dow Jones, the Nasdaq, and the S&P 500 all also moved up. When we have a look at the sectors, all sectors were moving strongly. Financials out in the lead, 1.49%. We had XLP, consumer staples, randomly behind it. Then we had utilities, not that much further behind that, and technology in between. It's weird. Two defensive sectors and two aggressive sectors all kind of moving along in the charge to the top. So it's not really a clear sign anyway into these non-farms. We go back over this chart just quickly here. Will we see a sell in May? Well, we're still only just in May. We've had a bit of, let's call it, turbulence so far in the markets, but nothing more at this stage. Q1 2020 earnings beat data now only 82%. This was sitting at around a 90% plus. So as more come in, look at this, we've got elite amount of beats, 1337 guys. That's always fun to see. So we've got a huge amount of beats and a very small amount of misses, with most of the discussion being around growth and whether the core market growth for these businesses has been strong enough. That's really what's effectively stopped or slowed the growth curve. If we go over here to the dollar index, this is probably where we should start with our technical discussions today, because I think gold and silver have been two of the best trades in the market. And we've been on top of that as a community together so far. And I'm really, really happy so many people have been taking advantage of these technical opportunities. We had our supports, we had our resistances, and we were unable to breach this level. Just remember, again, non-farm payrolls, about 1 hour before the stock market opens on Friday, a very important event for the dollar index. You can see the dollar index is in the middle of nowhere land. If we go down into something like a 2-hour chart, you'll instantly see here that it's right around that support line. Here's the support of 90.85, 90.85, 90.85. So if the dollar index is going to bull, it's going to bull here. If it's going to bear, it'll get through here, come back down to the trend line, and probably try to snap that off during the non-farm payroll employment change. If we move over now to gold, you will see a great breakout. So our real term goals here has always been around 1825 in gold, ever since we saw that double bottom back here break through. It's been slow and steady, as it always is in trading. Sometimes it's not always like hyper movements to the next level of resistance. This is just normal trading in a normal type, in a normal style of swing. But here we have the resistance, and I want to take you guys down a story here around the 2 hour, because yesterday we were viewing this in the live stream and we were talking about this very specific level. So we're talking about the price action coming into this break, and I want to just really show the community how you can read this chart. So number one, we have bullish wicks down here. We then get another bullish looking candle, and then we get 2 rejections right at the resistance of the previous point, just before that 1797. We then see a bullish hammer again, and we get a follow-on through. So it's this follow-on through that snaps off these 2 highs here. We don't need to wait for the close. You'll actually see a breakout. And we watched this live through the stream. We actually watched this literally live into the market open, and we saw it chunking through all of the stop losses, because there's a lot of people that were shorting this level. A lot of retail community, a lot of people are seeing this. They're looking at it. They're going, it's a channel. They're literally not reading these price action based movements, and they get their stop losses kind of crushed. So what's next for gold? It could go straight to the 1825, but I do think it's about non-farms. So it may come back down, retest this zone at around 1800, and then hopefully bounce back up to the 1825. The first initial stop loss kind of hunt move up, that's been completed, and you can see now it's consolidating. When we move over to something like silver, you'll notice here with silver, strong bounce, great, again, wick rejection, showing the bullish momentum in the squeeze was there. We see the breakout here, even cleaner, and then boom. It was a massive move there up to the 27,255, giving us a new high on our eventual aims to get to the 28. And then, of course, after 28, 30, and after 30, could we be going to 50 for silver? Well, it all is around these levels. Remember, we've been watching 30 now for years, and realistically, we know this zone is where the big banks come in and they manipulate the rubbish out of it because they do not want it above this level. If it gets above this level, though, history is on your side for a very large move. So 28 is the eventual target here for silver. It all comes down to non-farm payrolls, employment change tonight to really give that a catalyst into going stronger. If the dollar index does fail and weaken, then we also expect the stock market to go up, and we'll talk about that very soon. Let's move over to Bitcoin. So Bitcoin can still consolidating. The really key important level here is about 58.5 on the 8-hour chart. This is the 4-hour chart. On the 8-hour chart, you want to see it break past this level. Once it does so, it'll hit 60 quite easily. And I think due to the consolidation of where it's been happening, once it gets through the 58.5, 60 will be taken out, and we'll move on to the 65. Where most of the money has been recently, though, has been in the big alts. So we saw Ethereum get to 3,500. That was enough for it. I think that's kind of a really great initial area for it to hit. Then we saw that strong movement yesterday come out of ADA. ADA just absolutely popped, hit $1.70 a few times here, and is still looking relatively strong. We've seen DOT come through with a really great break above 40, which is giving it strength. We saw that move up to 43.90 yesterday. Still got room in it, this thing. It could go all the way to $50 as long as the market holds. And at the time of this recording, we're seeing Doji really failing here. So it was that buy the rumor, sell the fact. Well, we haven't seen this fact yet that comes through on Saturday, but this could pull all the way back down to these previous highs around that 45 area, and then maybe it finds some bounce pressure there. So remember, if Doge does fail, it doesn't matter as much to the market, but if Doge goes crazy and goes all the way up to $1 over the weekend, I think you've got to be very, very careful, because if Doge moves, it kind of smashes the rest of the market. So always be watching this one whenever possible. Tesla, let's move over to the stocks. Tesla, what can you say? Holding the level just barely around that 666. It's where it's kind of finding some level of buying pressure. We go down to a 2-hour, you'll see it's completely sloppy. There's all sorts of resistance in its path. All the moving averages on the smaller time frame now are above current price, and it really needs to find some bullish momentum. But based on where we're looking at the indices right now, based on those earnings that came out from the hyper stocks, Tesla has a good chance to be green, at least in the pre-market, into the actual market open through to tomorrow. It still looks terrible on a chart when you look at it. Maybe what I would be doing is drawing through these last kind of 2 peaks and just seeing how it interacts with this zone, because that's all we've really got. And if it gets through there, maybe some day traders pull it up to the 700 to the 720. I'm not too interested in Tesla long, other than the investment side of things, until we get a sequence of higher highs and higher lows. We want to see higher peaks, higher troughs, that kind of sequence. We don't want this gradual decline that's occurring here with huge bounces and huge busts. We need more price action. It's always about the price action whenever possible. Let's now move over to the US 100 because I'm seeing here in the futures something very interesting. Number one, it based here at 13.4 twice. So yesterday it sold off and it sold off previously, and now it has bounced with the S&P 500. So the S&P 500 found a lot of strength in the back half of the session. We looked at that before. We have a shooting star pin bar rejection candle here. That could be getting taken out very shortly. We do know as well that we have our 13,725 level to contend with, which will be a 50 exponential on the 4-hour. But this is shaping up like a little mini double bottom here. So it's going to be crunch time. It's at a point of resistance right into non-farms. What will the non-farm figure give us? That is what is going to push the market either higher, or we're going to see another sell-off back down to the 13.4. And we know that if it gets through this 13.4, not only is it going to the 13.3, but it actually probably continues a sell-off throughout the May period. So there's a lot at stake here over the non-farm figures. As we know, these are always important figures, and if they upset the market, boy oh boy, it could get real very quickly. Let's have a look at the S&P 500. So the S&P 500 actually gave us a full sequence reversal yesterday. We had a 2-hour pin bar right here. You'll notice hammer came through, very strong purchasing then entailed, and this was actually a pretty damn strong trade. I think this was a stellar little kind of day trade. If you saw this kind of rejection, you see this kind of movement here, you can start taking things towards the long. It's back at 4,200. Pretty big moves. Some of the earnings are pushing this through, and we're very, very close to doing something significant, which is to actually get a nice new weekly close. So if we think about these candles, we have a rejection here on the weekly. We then have a rejection the other way on the weekly, and now we have a rejection to the upside on the weekly. The market is completely confused. We can tell that by these prices. It doesn't know what it wants to do. It looks like it wants to go strong, but really all this proves to me is that if the bears get it through 41.20, which has always been the level that we've been looking at as a community together, this zone is going to be insane for the bears. 41.20 has got to be where the bears take full control. Because imagine if this closes up here on the Friday session, and then we get a reversal candle, the bears through that. Oh my goodness, you're taking out the wicks, you're taking out everyone's stops, and then you're really starting to push deep low into the weekly 20. So this is a confused market. It doesn't know what it wants to do, and it's clearly just waiting for the non-farm employment change figures. Now, they come out 10:30 p.m. my time here in Australia, Australian Eastern Standard Time. As I said, work out your own calendar. Go to forexfactory.com or MarketWatch. Get your calendar open for these times. It is 1 hour before the US stock market open, though. I can tell you that much. So as always, guys, look, it's a quick recap here on Friday because there's a lot going on, but we can't really tell much until the unemployment change. You'll see the confusion in the charts from this indecision that's going on to the bull and the bear side. We had some good trades this week. Obviously, the hyper stonks came through with a decent earnings results across the board, and hopefully, whatever side you're on is the right side right now. Join us for non-farm payrolls tonight. Make sure to subscribe. Of course, hit that like button, and we'll see you either live tonight or with another recap video on the weekend. Bye for now, guys.